Welcome to Macro Crazy, where we try to help you on your macro trading journey. Hope you're having a good week so far. Mostly it was a directionless week, Monday, Tuesday. Wednesday was exciting, looked like the market was going to be down. Then you had Powell come in and open his mouth in the afternoon. Of course, everything was bid after that. Market was up significantly, dollar was off, yield curve steepened basically because Powell was saying that we're close to the terminal rate, meaning the peak of interest rates. Although he also added that we're also likely to stay higher for longer. So even though the market was bid, that's something to keep in mind. It remains to be seen whether this move up is sustainable in the long run. In the short run, yeah, probably momentum is there to keep going higher. But Powell was very specific that rates are going to stay high until they really have killed the inflation issue. So it doesn't really change my view. The rally is here, but at some point there will be a sell-off. The dollar is going to go lower, even though rates are going to stay high, and yield curve is going to flatten. So this might be an opportunity to get in and position yourself that way if you feel similarly. And or you can buy into the peak is here and the economy is going to turn around and they're going to cut sooner rather than later, which means you could take the opposite positions. Up to you. Okay, moving on from Powell, fixed income I briefly mentioned, yield curve steepened yesterday, bullish case. In FX, dollar was sold, pound, euro, yen were all bought. Oil was higher. Inventory drawdown was the big issue, plus now Powell's comments. COVID, there was news out of China. Who knows how true this is, but it keeps coming up. So maybe there's truth to this, that COVID curbs will be easing. So that's bullish for global economic growth. Bank of England comments, one of the members said that inflation is going to decline rapidly in 2023. Finally, comments from an ECB member, I think an Italian one, who said that basically the bank was close to neutral and you shouldn't look for 75 basis point hikes going forward. Okay, a quick data review. GDP number came out earlier this week, a little bit better than expected. Inflation number, PCE, it came out a little bit worse than expected. Home sales, a little bit better. Finally, jobs numbers were worse than expected. So looking forward, as I mentioned earlier, it depends on your view, top-down view of where you think we're headed. If you think we're at the peak of rates or very close to it, and the market will be forward-looking, and cuts will be coming sooner rather than later, then you would want to be in a risk-on position. You could buy consumer discretionary and other risk stocks. On the other hand, if you're of the view that rates are going to stay here higher for longer, as Powell has stated would be the case, then you would want to continue to be in a risk-off view, and you would want to fade this rally and look for the market to sell off and resume its downward trend in 2023. Good luck. If you're getting value out of these videos, consider subscribing. Thanks much.